Hey traders, it's Chris here. Welcome back. So American Airlines, AAL, it is sitting about $11. It's only a few bucks above its yearly lows. It's looking pretty cheap right now. The question on traders' minds is, should you buy? Should we be buying at these prices right now? So we're going to talk about that. We're going to talk about analyst ratings. We're going to talk about where option traders are positioning right now. We're going to talk about some of the fundamentals. Robinhood traders are also heavily positioned on this stock. It's one of their top favorites as a whole. And then we're going to get into some technicals of how I think you can trade it and how I'm looking to trade it. So we're going to jump into that. Before we do, go ahead and hammer that like button. We appreciate it. Subscribe to our channel if you hadn't already. Helps us out with the YouTube algorithm, and that helps us as a channel continue to grow and continue doing these videos for you. So we really appreciate the love you've been sending to us. Some great comments and great feedback. We really thank you for that. Okay, so the first thing we are going to look at as the analyst ratings on the stock, and we are seeing some movement on this here, and that's kind of important. So the first thing I want to kind of mention here is if you look at the buys over the last 3 months, it has declined. The month ago, or actually last month, it was the most bearish. There was only 2 analysts buying. 3 months ago, there was 4. So it was cut in half. It's bumped up to 1 analyst buying it right now, but if you look at that, it's still, on the decline. It's lower than it was 3 months ago. So current sentiment is not very positive on that. In terms of the people that are got a hold rating on it, holding, that has remained completely flat. So nobody has changed here. This is the same number of people that are holding right now. What is most interesting though is the sell rating here. So it's continued to increase as the stock has evolved over the last few months. So a few months ago, 3 months ago, there were 5 people that had a sell rating. Then last month there was 7, and now there's 8. So you're talking about a 60% increase from 3 months ago. For analysts to start to shift that much towards bearish, that generally means that their medium-term prospects on there are not very good for the stock. That's what they're viewing on this here in terms of their data and research. So it's pretty interesting to see this noticeable shift on both sides, on the top side and the bottom side. Not very good for the stock. I want to talk about some of the fundamentals and internals that's going on with the company. So the first thing we got to address is flying. You cannot fly to Canada. You cannot fly to Mexico. The borders are closed. You cannot fly to most countries in Europe. So you're pretty much talking about a lot of international travel is completely cut off. And then on top of it, not many people are going to want to get on planes. If they know that, hey, there's a huge increase in a chance of them getting infected, most people aren't going to want to take that risk. Now, while there may be some interest in flying domestically, you're talking that passenger volumes are down anywhere from 80 to 95% from pre-COVID starts. So not very good for that as a whole. You can expect that just revenues are going to be down. And the thing about it is that it's kind of a fluid situation. We don't know how the coronavirus is going to develop, if there's a second wave that's coming. We don't know if certain countries are going to open up their borders or keep them closed, and for how long. So this just kind of creates a little overhanging specter over it. And there's just really no way that they can start really building revenue and reservations, any sort of travel outside the US right now. So you're just going to have this overhanging factor that's going to really curb revenues as a whole for most airlines. The second thing I want to talk about is these PPP loans that they got, a lot of the airlines got. So you're talking that United had a huge portion of it, Delta had a huge portion of it. They had billions and billions of dollars. But the problem is that there was a time limit on this, saying, hey, you had to keep these employees through September. Well, some of them already started to telegraph a little bit and kind of foreshadow, saying, hey, look, we might not be able to keep a lot of these employees if we don't get new funding, if we don't get any new support. So they are predicting that they're going to have to furlough a lot of their employees, and at best keep about 20% of their staff, maybe even less, on hand after that. That's not a good sign when the company themselves are admitting, hey, a lot of these employees we won't be able to keep on. We're going to reduce staff massively across pilots, flight attendants, and just the support staff that they have. They're going to let go of a lot of it there. So that's not very good. They themselves are seeing that, hey, the demand's just not there yet. And some of their own internal estimates are suggesting that flight travel might not resume back to normal for 2 to 3 years. So that's going to, with that in mind, companies are going to want to keep their expenses low until they feel like they have, really good demand building back up. So who knows how long that's going to be, but that is not good for the stock. The next thing I want to talk about is the put-call ratio happening right now. So put-call ratio is kind of like an option sentiment indicator. It's where option traders are positioning themselves in terms of the stock. And just today, the put-call ratio was heavily in favor of puts versus calls. There's more traders taking option bets on the bear side versus the bull side. It's about 130,000 puts today alone and only 110,000 calls. So for a stock to have that kind of imbalance is telling us Hey, the majority of option traders, about 20% of them more than are on the bear side than the bull side. And so until that thing starts to get into more equilibrium, you're going to see continued pressure on the stock price. So not a good sentiment indicator for airlines as a whole, including American Airlines. Okay, so now I want to talk about Robinhood traders. And so the robintrack.net is a great website that tracks Robinhood traders and their positioning on it in relationship to the stock price. American Airlines is the number 3 most widely held stock by Robinhood traders. It's clocking in at approximately 658,000 people holding the stock. And this is one of those stocks that actually Robinhood traders have not been tracking well. DraftKings, they were tracking really well. As the price was rising, they were buying. As it was falling, they were kind of holding. Another one of those is Tesla, Microsoft, Nvidia. But American Airlines is one of those stocks that the Robinhood traders don't seem to have their finger on the pulse on. They tend to be going in the opposite direction of what's happening with the stock price. So as they started to really increase accounts and started increasing positioning, the stock's been falling. They are increasing positions. As it was holding on the bottom here, they were continuing to increase their position, just relentless buying here. Personally, I'm not sure why you would continue to buy. Maybe because they thought it's cheap and airlines will survive, but keep in mind there are many people that predicted that at least one major airline is going to go under this year. So if you're holding a stock and it goes under, that's going to put a lot of pressure on your investment. There was a brief kind of point where they were tracking it well, where it climbed for that 1 week and really kind of broke out of this range. They kind of tracked along with it, but then as it's falling, they're still adding more positions. Not as much, but they are. Again, I'm not sure what the underlying thinking is. You never want to buy a stock simply because it's cheap, because it can always go lower. There are many people who bought Lehman Brothers because they thought it was cheap and it collapsed. There are many people who bought Nokia because they thought it was cheap and it collapsed. There are many traders who bought Bear Stearns because they thought it was cheap and it collapsed. You never want to buy a stock simply because it's cheap and you think there's a lot of upside. So super important to Robinhood traders. Make sure you take note of that here. So there's a lot, being their 3rd most widely held stock, if this thing was to break through the lows here, the yearly lows, which I think is around 845, 847, then that is just going to put more pressure on them to unwind some of their positions. I'm not sure how many Robinhood traders have stops below that, but I'm willing to bet some of them do. So, that's not going to help their situation, because when they exit out of their position, they're going to have to do so with a sell order, which will just fuel further downsides. So Robinhood traders, you really got to be careful on this one here. If you think about all the other stocks that have rebounded, there are certain precious metal stocks or certain tech stocks that have done really well. Some are making new highs, all-time highs. But the airlines, travel, and entertainment industry has not gotten off the mat. They're still hanging on the lows. And that should tell you something, that if you're still long, since March, your capital is not being allocated very, very well. That means for, 3-4 months now, your capital is not making you any money. It's not an efficient way to use capital just to hold a stock because you think it's cheap. So this could end up hurting a lot of Robinhood traders on here. You could see a lot of traders go under on this one. There's definitely a lot of bag holders right now in the Robinhood universe. And, based on how things are going, it seems like they're going to continue scooping this up. So definitely beware on this one here. Okay, so to your favorite part, the technicals. So we're going to go over some charts, and we're going to talk about different trade scenarios, where I'm positioned right now. Full disclosure, I have no position on American Airlines right now, but I am looking to take a position on it. So I'm going to talk about how I'm looking to trade it right now, what I'd want to see change for me to, in the structure, in the price action, for me to change my position on it, potential option plays here, and so forth. So let's get into this here. Okay, so we're going to look at the weekly chart here, partially because we are at major lows here. So this was the yearly low, 825, 830 roughly. And if you think about what's happened here, so this was, this is when the selling started to happen, and it was looking pretty dire. It had a brief false break. There was 1 week where it showed a tremendous amount of buying, but look what happened. 3 or 4 of the last 5 weeks have been sold lower and lower and lower and lower and lower. So we are now back, right about $11, and we're only a few dollars off the lows right now. The fact that it was up for 1 week and then it just lost all that continually tells me that really there's nobody to underpin this market right now in any sort of strength. If it did, it would have been able to hold above some of this consolidation, maybe 13, maybe 14 or 15, but it just wasn't able to hold any of the gains. That tells you there's not a solid floor of buyers in this market right now. So I'm expecting this to head a little bit lower. Short term, I am bearish. Would I be bullish on this stock? Yes. Between $2.50 and $5. Not now. And so would I consider being bullish around $9 towards this yearly low? Possibly, but I would want to see, the market stabilize in this kind of lower end range for a little bit. And I probably want to see some size coming in. Maybe things change in the options market. I'd really want to see multiple variables step in to say, hey, we are going to hold this bottom right now. Until I see that, the overall evidence and pressure is to the downside. That's the line of least resistance. The line of greatest resistance is to the upside. And we've seen that because the 1 week that it made gains, the sellers came in heavy and said, nah, you're overvalued at this point. We're going to send you right back down where you started. Now, looking at the 4-hour chart, there's a couple things that we can see. So this VWAP right here is the anchored VWAP. It's anchored to the weekly time frame. This is a good medium-term swing trading kind of indicator. And you can see it's just been hamming in the gains here. It just stays below it, can't get above it. If it does, briefly, it gets back below it. It just continues to reject and sell lower. So short-term, the pressure is still on. Nothing's changed in this relationship here. I think there's some potential for it to bounce a little bit, maybe around 10.33. But if that, because of this bounce right here where the big launch was, you also have some resistance here, resistance here, resistance here, decent base of support, decent base of support. So I think there's a potential for some shorts to take some profit here. But if we don't see any aggressive buying or any stabilizing happen here, then I think it's going to start probing into the 10s and then the 9s here. So short term, there's still a lot of pressure in the stock, so I'm not interested in buying at these levels. Now let's talk about a few ways that you can potentially play this. So if you are looking to be bullish, my preferred area, if I was looking to be bullish on this here before I get long, is not where we are now. I would want to wait towards the yearly lows. This gives you the lowest amount of risk. You could get in around 9, maybe just sub 9, and have your stop below the yearly lows at 8.28. So less than $1 stop, and you'd have potential upside of maybe 10.20, and then if you can get a little bit higher, maybe up to 12 or 12 flat or 11, high 11s there. So you'd have the chance for a $1 stop and a potential $3 target on there. That's not bad, but it's not fantastic in and of itself. So if this area was to collapse, then we have to go back to the weekly chart, 2012, 2010. So the next major kind of structural low, I think there's a potential support area around 807. But then after that, you're talking around $4 or $5. So I personally wouldn't be bullish until we start to get around this range here, because you're talking all-time lows on the stock here. At that point, just from a value perspective, it might be a good play. Obviously, we'd have to see how the situation develops. Are they showing signs that they may go under? Are flights starting to return? Is there some hope that, passenger volumes are going to start increasing? They're loosening restrictions on travel to certain states or countries. You'd want to see some multiple variables coming in to support a potential bullish case. But the first area that I would consider getting long would be somewhere around $5 and $2 there. If you want to be on the bear side, then I would suggest sitting back and waiting for kind of a pullback before getting short. Trading breakouts hasn't exactly worked super well on this. It kind of has faded a little bit, and then just kind of drip fed a little bit lower here. This is not aggressive selling, but it's consistent and steady. So it's not the kind of thing that you want to trade a breakout and just expect it to rip lower. It's one of those things that you kind of want it to pull back a little bit. So maybe look for it to pull back towards the weekly VWAP. One of the first areas that I would consider getting short would be around 12 here. It kind of matches up really nicely with the weekly VWAP and this kind of, you kind of see the resistance there, this kind of bounce here and a little bit of resistance here and this spike here. So that is one potential area you could trade the underlying if you wanted to short it. Now, there are a couple option plays that you could do on this as well. So if you were bearish on this, well, first off, kind of figure out your area where you don't think the market would go above. So one thing you could look at is here. This is a pretty strong resistance here. You got resistance here, resistance here, resistance here, and a little bit of this here. Just 1 4-hour spike above it. So this is held quite well on the majority of rejections over the last few months. So if you're bearish on it, you could do a bear call spread. This is a credit spread. So this is where you buy in out of the money and you sell in the money. And the key is you want the price to close below your lowest strikes on this one here. A bear call spread is a credit spread. It's where you are bearish on it you're selling, you're buying an out of the money and you're selling an in the money call, and you're not expecting the price to get above those levels. So the great thing about this strategy is you collect a premium upon selling the spread, and you have a fixed amount of risk on this one here. Now you'll have to play with your strikes and everything like that, expiration. Being that implied volatility is not super high, you're probably not going to get massive premiums for it. Generally, when you're a net option seller, you want implied volatility to be high because you're going to collect high premiums for that. And if the implied volatility falls after that, then that just benefits your overall option trade. So that is one potential play on this one here. Now, if you're bullish, the first thing you want to do is kind of mark your lines in the sand. Maybe you think, hey, you know what? I don't think the market is going to get below this yearly lows. So then you could do a bull put spread. That's where you buy an out of the money put and sell an in the money put. And you would do it below your support zone. So if you think this is kind of your support zone here, you don't think the market's going to get below this, well, then you could buy an out of the money and sell an in the money below these levels here. And basically what you're saying is, hey, I don't think the market is going to get any lower than this. It should bounce above that. And if the market does and it closes above your higher strike price, then you get to keep the full credit. Now, keep in mind on both of these option plays, there is risk on this one here. The risk for your bear call spread is that the market closes above your higher strike price, in which case you would lose your max amount. The risk is fixed on this, whether it's a bear call spread or a bull put spread. And sometimes that risk can actually be more than your overall reward. But you can't just think about risk and reward two-dimensionally. You got to look at the probabilities. So that's where you want to look at your probability of in the money happening and your deltas on this one here. That will give you an overall idea of whether this will work itself out. If you were to do these option trades 100 times, would they work themselves out mathematically to your advantage based on the probabilities? So for the bull put spread, basically you just want to buy your out of the money and sell your in the money put below your support zone there. If the zone that you think is going to hold, that's what you want to defend your option spread on that one there. And so that's pretty much it. We've gone over some trade ideas, some potential credit spreads, option plays that you can do on this one here. We talked about areas, potential support zones that if you want to be bullish, zones that I would consider to be potentially strong zones. We've also talked about some bearish zones that you can look to sell if you want to take the short side. So there's definitely a lot of plays on this one here, regardless of whether you're bullish or bearish. Short term, I'm bearish on airline stocks as a whole. In our late February article, we talked about how to trade the coronavirus. The stocks that we said you should be the most bearish on, the ones you want to watch out for, is travel and entertainment. And so if you had followed that trade advice, you'd be in massive profit right now, as some of the top trade ideas we had on that was selling airlines. And airlines are some of those stocks that just haven't really taken advantage of any of this market bounce that's happened in the S&P or the NASDAQ or the market as a whole. Airline stocks, retail, entertainment have really suffered. So that was definitely one of the better plays out there. I hope you profited from that. Now, medium term, I'm kind of neutral on airlines as a whole, mostly because the situation is fluid. I don't know how long certain countries are going to not permit flights from the US or from Americans. You know, Europe, Canada, Mexico, that's obviously going to hamper their overall revenues as a whole. And we don't even know if there's a second wave that's really going to materialize. We've seen spikes in Arizona and Florida, many different states right now. Is that the second wave? I don't know. I'm not a scientist and I'm not Nostradamus, but I have to stay neutral on them as a whole until I see more support variables coming in that would suggest, hey, there's some really, good things coming in the pipeline that are going to support it. Long term, I am bullish on airlines, but again, I'm not there yet. I want to see things change. And right now, when I look at all the underlying variables that are kind of underpinning, airlines as a whole, I just don't see a whole lot in the pipeline, short term, medium term, Q3, maybe Q4, that are going to suggest that, hey, things are going to start to pick up for these airline stocks. Eventually they will. But if they're like this and they're depressed in these ranges for 6 months, a year, I don't think that's the best way to use my capital. I don't like to allocate my capital for 6 months a year not making money, because that's lost money that I can be putting into other stocks that are going to generate revenue. So until I see those variables behind the markets really start to shift, I'm just going to stay bearish on it short term. I will watch these lower support levels as potential areas to get long, But I'm going to be watching the price action. I'm going to be watching what's happening in the options market. And I want to see something going on in the overall broader market as a whole, the fundamentals and the internals there saying, hey, things are starting to turn around for it. So September is going to really be a key litmus test in terms of airlines. Hey, how many people are they going to be laying off? What are their Q2 results? You know, that's going to also be huge. We haven't gotten a lot of them yet. So we need to see more information at this point before, in my opinion, that we can turn bullish. So with that being said, I hope you enjoyed this video. Hope you found it educational. You learned a lot. The goal of these videos is to help you make money trading and become a better trader and build your skills in different perspectives on how you can trade the market and how you can find trade opportunities. That's our goal. So if you like this video, please make sure to subscribe to our channel. Hit that like button there. Give it that little pat on the back there. We really appreciate it. We're really grateful for your support. The community has been great as a whole, and we really appreciate your comments and feedbacks on it. So if you have trade ideas on American Airlines, make sure to let us know in the comments below. We love hearing from our community. So with that being said, until next time, good luck trading, be smart out there, and I'll see you in the next video.